Southeast Asia's major economies are on an upward trajectory as the region continues to recover from the severe impact brought by the pandemic and the war in Ukraine, disrupting the world supply chain and resulting in a dramatic increase in commodity prices. In the first 6 months of the year, the growth leader in the region was the Philippines, expanding by 8.2% in the first quarter, supplemented by 7.4% in the second quarter. Followed by Malaysia with an impressive growth of 8.9% in the second quarter, from the moderate growth rate of 5% in the first quarter. Coming closer is Vietnam with sustained growth of 5.03% in the first quarter and its fastest growth pace for a decade of 7.7% in the second quarter. While Southeast Asia's biggest economy maintained its growth rate of 5.01% and 5.4% in the first and second quarters, respectively. Likewise, Singapore's economy managed to grow by 4% and 4.4% in the past 2 quarters. Meanwhile, Thailand's recovery is the slowest in the region, growing by 2.2% in the first quarter, and 2.5% in the second quarter. The country's current economy is still below its pre-pandemic economic size. The region's economic outlook is the most optimistic among the emerging market economy in the world, where the full-year growth rate for the Philippines is expected in the range of 6.5 to 7.5%. Vietnam at 6 to 7%. Malaysia at 5.3 to 6.3%. Indonesia's full-year growth rate projection is at 4.5 to 5.3%. Singapore at 3 to 5%, and Thailand is expected to grow at 2.7 to 3.2%. According to Asian Development Bank, the 2022 forecast for Southeast Asia is marginally upgraded from 4.9 to 5% as domestic demand benefits from the continued lifting of COVID-19 mobility restrictions and the reopening of borders in some economies in the subregion. Southeast Asia's annual headline inflation continued its uptrend trajectory due to the scarcity of supplies of commodities. As of July this year, the average inflation for Thailand is 5.9%, the Philippines at 4.7%, Singapore at 5.2%, Indonesia at 3.3%, while Malaysia and Vietnam at 2.5%. Thailand recorded a 7.6% increase in consumer prices in July, while the Philippines' inflation rose by 6.4%, the highest recorded inflation since October 2018. Meanwhile, as of June, Singapore's core inflation rate rose to 4.4%. The Philippines, Singapore, and Thailand are amongst the severely hit by the inflationary pressure in the region, due to the disruption of the worldwide supply chain. The Philippine economy's recovery momentum continues in the second quarter, but it is slower than expected amid high inflation. However, the government is confident this year's growth target remains achievable, giving the central bank leeway to further tighten policy to curb price pressures. According to the Philippine Statistics Authority, the country's gross domestic product sustained its expansion in the second quarter of 2022, growing by 7.4%, slower than a year earlier when the country expanded by 11.8%, and slightly less than the first quarter, growing by 8.2%. It was the slowest growth since the third quarter of 2021, but the second fastest so far in Asia for the second quarter of 2022, after Vietnam, which recorded 7.7% economic growth, but higher than Singapore growing 4.8%, and Indonesia by 5.4%. On a seasonally adjusted basis, however, the economy contracted by 0.1% in April to June from 3 months earlier, when quarterly growth had been 1.5%. The second quarter performance is considered decent compared to other emerging markets in Asia, and is still in line with this year's target for growth in full-year GDP of 6.5% to 7.5%. The newly installed Marcos administration, whose 6-year term began on June 30, is further targeting growth in full-year GDP of 6.5 to 8% annually from 2023 to 2028. This growth target is one of the highest in the region. The economic distress that shook Malaysia in 2020 appears to be winding down, as the country embarks into 2021. The government's effective response to the global crisis has paved the way for a swift economic recovery in 2022. Boosted by expansion in domestic demand and resilient exports, the country's economy has been on a strong recovery path since the country reopened its borders in April. Now Malaysia is poised to as one of the fastest-growing Southeast Asian economies in the post-pandemic era. Beating the median estimates from The Economist, the country's gross domestic product expanded by a better-than-expected performance of 8.9% in the second quarter of this year, outpacing the first quarter growth of 5%. This is the highest economic growth in the post-pandemic period after the economic recovery recorded in the second quarter of last year when the economy grew by 16.1% from a low year-earlier base. Performing better than its peers, where Vietnam expanded by 7.7%, the Philippines by 7.4%, Indonesia growing by 5.4%, and Singapore by 4.4%. Seasonally adjusted GDP for April to June was up to 3.5% on the previous 3 months when quarterly growth was 3.8%. According to the central bank, the economy expanded by as much as 16.5% in June. The economy widened by 3.1% in 2021, bouncing back from a contraction of 5.6% in 2020. A shock rise in commodity prices earlier this year, stemming from the Russia-Ukraine conflict, had largely undermined economic growth across most of the region. The country's Consumer Price Index (CPI) increased by 3.4% year-on-year, surpassing the average inflation in Malaysia for January 2011 to June 2022 period by 1.9%. Inflation expanded by 2.8% in the second quarter of 2022 and increased by 2.5% in the first 6 months of 2022. Bank Negara Malaysia is confident that the full-year growth for 2022 would be at the upper end of the previously forecast range of 5.3% to 6.3%. Gradual adjustments in the overnight policy rate would be necessary to avoid stronger measures in the future, adding that any moves will be done in a measured and gradual manner to sustain the country's growth against the risk from slowdown of global economy. Vietnam's economy is on course to surpass its 2022 growth goal, as a better-than-expected second quarter performance pointed to a broad-based recovery in the Southeast Asian export powerhouse. The country's gross domestic product (GDP) in the second quarter of this year was estimated to increase by 7.72% year-on-year, higher than the growth rates in the same quarters from 2011 to 2021. Thanks to widespread recovery, the country recorded an impressive GDP growth rate of 7.7% in the second quarter compared to the same period last year. The service sector, which has suffered from severe economic impacts, has bounced back strongly while manufacturing has continued growing and exports hit historic highs. According to the General Statistics Office, the country's socio-economic development in the first 6 months of 2022 has prospered in most industries and fields, especially the processing and manufacturing industry, retail sales of consumer goods and services, and exports. Meanwhile, HSBC has raised its forecast for Vietnam's economic growth this year to 6.9%, from the previous prediction of 6.6%, which is possibly the fastest pace in the region. However, the growth forecast for 2023 was revised down to 6.3% from 6.7% due to growing risks, especially in the energy sector, according to the bank. Southeast Asia's biggest economy seems to be comparatively resilient when the world teeters on the brink of recession, with soaring inflation. Back up with an impressive export boom driven by rising commodity prices, resulting in a trade surplus in the first half of the year. However, monetary tightening, rising inflation, and a global recession risk threaten the outlook. Indonesia's economic growth accelerated in the second quarter, where its gross domestic product was up by 5.4% from a year earlier, showing the fastest growth rate in a year, as compared to the 5.01% growth in the first quarter, but slower as compared in the same period last year when the GDP grew by 7.07%. So far, Indonesia's economic growth is higher than the growth rate of Singapore at 4.4%. Meanwhile, Vietnam grew by 7.7%, and the Philippines up by 7.4%. With an impressive export performance, expanded nearly 20% from a year earlier, and even higher than the 16% seen in first quarter export growth. Indonesia, a major exporter of palm oil, coal, nickel, and tin, benefited from the upward cycle in commodity prices this year fueled by the war in Ukraine. The country has seen exports soaring, shoring up its current economic resilience, but once the commodities price falls, the resources-dependent economy will inevitably take a hit. The boosting of Indonesia's economy in the second quarter of 2022 was seen in all regions. The group of provinces in Java Island became the main contributor with a role of 56.5% of the national economy, with economic performance experiencing growth of 5.6% compared to the second quarter of 2021. Followed by Sumatra Island by 22.03%, Kalimantan Island by 9.09%, Sulawesi Island by 7.09%, Bali and Nusa Tenggara Islands by 2.7%, and the islands of Maluku and Papua by 2.5%. According to Indonesia's central bank last month, the rise in full-year GDP for 2022 would be at the lower end of the range of 4.5% to 5.3%. It previously forecasts growth in the middle of that range. Consumer prices in July were up by 4.9% from a year earlier, marking a 7-year high in inflation and prompting calls by economists for Bank Indonesia to lift interest rates from the low end during the pandemic era. According to the preliminary data published by the Ministry of Trade and Industry, Singapore's economy grew slower than expected in the second quarter. The Asian financial hub's economy grew by 4.8% from April to July, faster than the 4% revised growth figure seen in the first quarter, but missing forecasts for the second quarter. The growth rate had expected an increase of 5.2% year-on-year for the second quarter. On a quarter-on-quarter seasonally adjusted basis, GDP was unchanged from the 0.9% expansion posted in the first quarter. Noting that sequential growth in the second quarter narrowly averted a decline. This is in line with the long-held view that there will be spillover effects from a slowdown in China and pickup in global uncertainties and increasingly tighter monetary conditions. Moving into next year, policymakers expect growth to moderate further but do not expect a recession or stagflation at this stage. The latest data showed headline inflation rose to 5.6% in May, up from 5.4% in April and hitting its highest reading since November 2011, when headline inflation reached 5.7%.